Morning, folks. It is the appointed hour, and we do have a quorum. So let's call the Thursday, April 14th, 2016 meeting of the Retirement System Board to order. Item number 2 on our agenda is approve the minutes of the March 10th, 2016 meeting. Have a motion and a second. All in favor? Aye. All opposed? Motion carries. Good morning, sir. Item number 3 is to receive the report of judgments purchased for the month of February 2016 in the amount of $429,930.01. A motion and a second. All in favor? All opposed? Motion carries. Item number 5, we have several approvals. What I'd like to do, the pleasure of the board, is to consider items A through E with one vote, and then do items F and G separately, if that's okay with everybody. Yes, item 4, ratify approvals. So,
move the item as the chairman requested.
Second the item as the chairman.
have motion and a second. All in favor? Aye. All opposed? Motion carries. Item 4F is to ratify the action of the treasurer in requesting withdrawal of capital invested by the ERS in the Von Tobel Global Markets Fund, and in redirecting those funds to State Street Global Advisors for the allocation into the State Street MSCI Emerging Markets Index Non-Lending Fund. And item G, actions to ratify the actions of the chairman in executing the amendment to the Investment Council contract with State Street. The amended agreement is in your packet. Wiley, is there anything special we need to know about that? Okay.
We have the authority to cancel the other one and follow that contract cancellation.
Okay. We have a motion to second on items F and G. All in favor? All opposed? Motion carries. Item 5 is to approve the claims docket. A motion to second on item 5. All in favor? All opposed? Motion carries. Item 6 is to approve the following applications for service retirement. We have 8 cases. Motion second on item 6. All in favor? All opposed? Motion carries. Item 7 is to receive the report of death and approve the continuation of the pension to the spouse. We have 1 case. Motion second on item 7. All in favor? All opposed? Motion carries. Item 8 is to receive the report of death, authorize the payment of $5,000 death benefit, and authorize the secretary to make necessary changes to conform on the following. We have 2 cases. Motion to second. All in favor? All opposed? Motion carries. Puts us on item 9 is to receive the report of death, authorize the secretary to make necessary changes to conform on the following. We have 4 cases. A motion to second. All in favor? All opposed? Motion carries. Item 10 is to receive a presentation from James Gerber or his representative concerning his application for disability not in the line of duty allowance is permitted under the disability allowance of the municipal code, and B, enter into executive session with the municipal councilor to discuss said application. What's the favor of the board? And/or C, consider the approval of the following application from Mr. Gerber.
It's the discretion of the board whether they want to go into executive session. This particular case is very clear-cut. It was not in the line of duty. Our own physician has said declared that it's 100% disability involved in this case, and not much else to discuss about it. But at your discretion, we'd be glad to do that if you have questions.
So you move approval? Second.
We have a motion, a second, on item C. All in favor? All opposed? Motion carries. Item number 11, approve the request of the following to terminate vested rights and commence drawing retirement benefits. We have one case. Motion, a second, on item 11. All in favor? All opposed? Motion carries. Item 12 is the investment consultant report. Mr. Pujols, floor is yours.
Moving along briskly this morning. So you have the monthly report in front of you. The timing of meetings is very interesting. I was telling Renee, I had some client meetings in mid-March, or the third week of March. So we had, and they meet quarterly. So we had December numbers, and the December quarter was a very positive quarter. The period ending at the end of 2015. But January and February were very challenging, as you'll see in some of these numbers. And then March, we've had a huge rebound. The most important thing that we talk about each month is that we're not reacting to what's going on in the short term. You've got a long-term plan, long-term liabilities, and we maintain a long-term discipline. But from time to time, it gets difficult when you're looking at returns that are negative. I know looking at commodity returns in an asset class that you just added a little over a year ago, and it's down 30% or so, that can be painful. But also, you're thoughtful in how you allocate to an asset class that you know could be highly volatile. It's a very small allocation of your total portfolio. You have a 3% or a 5% target to commodities. The purpose of it is to provide diversification benefits and inflation protection over the long term. We see how quickly it can move. From February 11th, I'm not really sure what was so magical about that day, but it's really when we saw the markets turn. It was around about the time that the ECB chairman, Draghi, made comments on what they were going to do, the European Central Bank was going to do to keep markets propped up and buying bonds in Europe. Since that time, oil is up over 50%, and the markets are up significant. Equities are up significantly. So just looking at your March total return for March, the portfolio was up 4.5% in the month of March. That's a huge month, if you will, just thinking about it in those terms. In terms of the overall allocation, a little bit overweight to equities and fixed income, and continue to be slightly underweight to real assets as a whole. Primarily, that's the opportunistic real estate, which is a little bit underweight. Within equities, large cap, U.S. large cap and U.S. small cap are overweight. International and emerging is a little bit underweight. Just going back to the things that you just ratified, I know Patty was here last month and talked about Vontobel, the surprise announcement that the portfolio manager Rajiv Jain was resigning. We have seen, and as kind of expected, pretty significant outflows from that fund at the end of March, as reported by the mutual fund Virtus that they're the sub-advisor to. So we were pleased that we could get out in front of that. The recommendation on the emerging market State Street Emerging Market Index Fund is to provide exposure to emerging markets while we look to identify a new active manager. So longer-term solution, we'd like to have an active manager in that space, but we wanted to maintain that exposure, and the emerging market index allows you that. It also provides daily liquidity, meaning you could get in because we knew the money would be coming in mid-month, and a lot of other actively managed funds only take money at the end of the month, and you can't get out until the end of the month, so that would be challenging. So the money came in two tranches, I think Monday and Wednesday of this week. It all came in and has been reinvested in the State Street Index Fund. Our plan is we've issued an RFI to 20-plus emerging markets managers. As the market has sold off, a number of managers that we really liked that were closed in the emerging market space have reopened, so we're going back and vetting some new managers. So our plan is to come back to you in May with a list of candidates to then ultimately interview in June, new candidate managers for that space. So just wanted to touch on that. Looking at the second page of the monthly flash report, as I mentioned, the month was a great month. The year-to-date now, the total plan is slightly positive, up about 65 basis points, trailing the policy index a little bit. And really what we've seen with active managers, I know there were some questions about long-short last month. A lot of managers, whether they be hedge fund managers or just active, fundamentally based managers in general, really got whipsawed in this market. They were very defensive in January, positioned defensively into February, and then when the market took off, they weren't capturing that upside. Coming into the beginning of January, a lot of managers were less defensive as the market was going down, got defensive, and things really turned around on them. So I provided this supplemental, it's a very quantitatively oriented analysis of K2, because I know when we look at long-short equity, we're saying, well, shouldn't long-short equity be doing better when markets are down? And yes, over the long term, that is the expectation, and that is certainly what this has delivered. But these 2 months were very challenging, and it's primarily due to the what we're talking about, a lot more defensive and not keeping up in that up market. So if you just turn to the second page, you can see the second grouping is calendar year returns. And if you look at the 2015 calendar year, we show K2 on the top line. K2 was up 3%, the S&P was up 138, and the ACWI, which is a global benchmark, which is probably the best comparison for the K2 strategy because it's a global long-short equity strategy. They do allocate to non-U.S. strategies, down 184. So really did well in a pretty tepid market environment in calendar year 2015. 2011, not as good, but if we compare it to the ACWI, a global benchmark, they were protecting there. And then certainly 2008, that's what we're looking for, that significant insurance, down 14 when the markets are down 37. It's really, as you look at the last 3 months, January, February, and March, you see what happened there. January, S&P was down 5. They were down about 5 as well. Not quite as much as the ACWI, so not quite as much as the global benchmark, but it was really February where they got whipsawed because more defensive when the market turned around. They didn't recover as much at the end of the second half of February, certainly not in March either, which is what we've seen. But longer term, they're delivering really what we would expect. Similar equity-like returns with less than half the volatility. It is providing that insurance. That said, I mean, this is something that we're looking at because if you look at the front page, a couple of different things here. The lower left, this relative drawdown, the shaded area is the long-short equity, and the lines are the long-only benchmarks. What we're trying to do with long-short equity is exactly this. We're trying to not participate as much on that downside. But more recently, it's been a little bit closer. But the problem has been on the upside. If you look at the growth of a dollar, we've had such a tremendous upswing from 2009 through 2015, where long-short equity, you haven't kept up as much. And we wouldn't expect it to, but that's somewhat of what we're seeing. So one of the things we're redirecting some of our research to is looking at other volatility reduction strategies in a way to say, is there ways to reduce volatility in the portfolio that aren't as expensive? Is this insurance that we're buying, can you buy it cheaper, if you will? So it's something that we may be coming back to you and talking to you about. I wanted to point this out because I know there was questions about K2 last month, but we don't think that there's anything fundamentally wrong, that anything they suddenly got stupid or they're doing anything different. It's just it was a pretty unique period in the markets where we saw a lot of active managers really getting whipsawed in that fashion. The other thing that is certainly worth pointing out is on the commodities. As I mentioned, you can see if you go to on page 4, the Gresham TAP fund up 4% for the month of March alone. So very good return you're getting there. And again, this is a small component, but for the trailing 1 year, commodities are down 20%. So it's highly volatile, but you're starting to see that pickup as gold and oil have rallied dramatically. It may not seem like oil has rallied dramatically if you owned it at 100, but from 26 to 40, that's a huge move in the price of oil. So. Other than that, no manager issues other than the emerging markets, which we'll be looking at as I mentioned over the next 2 months, and coming back to you next month with a list of candidates and then interviewing in June.
Mr. Chair, I have a question. Jason, just out of curiosity, which sectors really seem to drive performance in the month of March? Because it was pretty dramatic.
Yep. Materials. And the energy sector really bounced back quite a bit. Financials have bounced back, but it's been pretty much across the board. Everything was positive. The market really moved pretty significantly. As oil turned around, everything turned around.
And my other question is, do you expect managers to maintain their defensive position, especially considering the uncertainty of the political climate?
Well, in general, as we look at your managers, I mean, this is something from a portfolio construction standpoint. You have a lot of defense built into your portfolio to begin with, from at the allocation level with long-short equity, at the implementation level with managers. Typically, the active managers that you have tend to be more higher quality focused, so that they protect in down markets. The greatest example would have been Von Tobel. Von Tobel was a very high, or is a very high quality focused manager. They would own primarily consumer staples, and they're not going to be up as much when the market was up. So if you look at the month, and I know we've just got out of them, but if you look on page 3, for the month of March, that strategy was up 8% when the benchmark was up 13. But for the year, they were down 7. Benchmark was down 11.7. I'm using them as an example because that's what you have in your portfolio, really across the board. Looking at a Times Square and an Ernest, Harding Levner certainly on the international side, Lazard to some degree. They're more value-oriented, but to some degree you have that. So we're implementing with managers that the active managers tend to be focused on quality and protecting in declining markets. Doesn't mean they're not going to participate when markets are up, but they're a bit more conservative.
Do we have any other questions for Jason? Thank you, sir.
All right.
Item number 13 is comments from board, staff, and citizens.
The only question I had is about the policy decision that we were looking at. I thought it was going to be on the agenda this month. Is it going to be on the agenda in May?
I was hoping, Wiley had some other things that came up, so
Okay.
we weren't able to get together before
Got it.
then.
Thank you.
Anybody else? Okay, with that, we are adjourned at 10:20. Thank you, everyone.